Johnny, in order for asset managers to really embrace digital assets, the correct infrastructure is required. How's this evolving?
Well, for a while we've been discussing that institutions will really struggle to get involved with digital assets and engage and invest in them unless the proper framework and infrastructure is available. So what they need is the fund managers that look after your pension, your ISA, your 401k. They need to have regulated exchanges on which these assets are listed. They need to actually have professional indemnity insurance. They also need to have strong, independent, well-known third-party custodians. I.e., if they're buying shares and bonds on your behalf, then those securities have actually got to be held by a third party because that's what the regulators actually insist on. So it's interesting that we've recently seen the London Stock Exchange Group issue 169 Sedol codes for cryptos and various digital assets. So you can see even some of the oldest, very well-established stock exchanges are beginning to reach out to this asset class. Insurance has now been available for a while, so there's no reason why people offering digital assets can't actually get the insurance that they need, and again, something to be insisted on by the regulator. The challenge, however, remains custody, with the only real institution of any real note being Fidelity Asset Management, who offer custody services. However, we've seen two recent announcements for an institutional offering of digital assets. The first is from the massive Japanese banking group Nomura, who are partnering with CoinShares and Ledger to launch Kumeani in Jersey, in the Channel Islands. I hope I pronounced that correctly. And the second is being led by ING Bank from Holland, who are working with ABN AMRO, BNP Paribas, Invesco, Societe Generale, State Street, UBS, a real European cohort of financial service heavyweights who have just announced that they're in the FCA's sixth sandbox and looking to create a custody solution for institutions. So it looks now that the main parts that we need and the inhibitors for institutions and asset managers to get involved are now available. So we'll probably see a lot more engagement by these institutions.